next session is coming up very, very shortly because it covers pretty much a lot of the things that we discussed in the panel discussion, questions around rules and regulations, questions around raising capital, cost of capital, but also just getting a gauge for where the industry stands at the moment and where potentially it could go in future. Ladies and gentlemen, I'd like to bring up to the stage Ramatoulaye GOUDIABY from the AFIS team, and of course, with her to present the African Financial Industry Barometer, Hicham BELEMQADEM from Deloitte in Maroc.
Comment vas-tu?
Madame la ministre des...
Honorable Minister of Finance, ladies and gentlemen, ministers, ladies and gentlemen, governors of central banks, ladies and gentlemen, ambassadors, presidents, authorities, regulations, and also financial institutions, dear ladies and gentlemen, it's a great pleasure for us to present the fourth edition of the Barometer for finance, African finance, and today we talk about partnership that we've had with the Deloitte institution. This study allows us to have an overview of the African financial industry and allows us to see the different African financial stakeholders and how they contributed to this study. But also there is a portrait and the landscape of changes, of strategies to put in place, and also challenges that we can find solutions to. So in our study, we have three major tendencies. So acceleration of digitalization, integration of sustainable finance into models, and also we also have partnerships through open innovations. These points are not just observations. These are historical points that our African industry is going through. This is a moment of reinvention where the opportunities are also vast, as well as the responsibilities. You're going to see in our study that to liberate its full potential, our institutions can actually work on the governance, but also risk management, and also invest in technologies for tomorrow. So for this is going to be a real booster to help with our reflections and also participate in facilitating your orientations and also having collective awareness creation. So let's start this presentation with the perception of the macroeconomic environment. And so we realize that we have a contrasting dynamic and we have a level of optimism that is stable with regards to last year. But this slight decline with regards to this sector. So we have the institution with about 88% and 75% of Pan-African institutions and 70% of regional actors that attribute these to that are superior or equal to these. So we have the fintech that actually have about 9.5 out of 10. So we can see that the capitals market is quite notable, significant, with a score lesser than 7 in terms of infrastructure. With regards to banks and insurances, we actually have, as you can see, the valuation that is balanced between opportunity and risk. With regards to inflation and its context, so the institutions acted accordingly. You can see that 88% actually think of actually adjusting their investment strategy. And so we have origin also on this graphic. So you can actually see in the blue, deep blue on the right, you can see the tariffs policies. So we have operational models that actually have 67% of actors that actually have seen sort of difficult credit conditions. And so risk management is crucial. and responders are actually talking about the degradation of their credit portfolio. So the priorities with regards to the sectors vary. So the banks are putting the accent on these tariff policies and also credit. So investment strategies and also the cost. And finally, we have the fintech actually concentrate on the results. So we can see that this leads to the full transformation of the industry in spite of the different challenges. Effectively and especially, let's get interested in how these economic perspectives are actually evolving and how they are done. So these are in terms of the preoccupations of the decision makers. So when it comes to economic determinants and inflation, which are really important for actors in 2024. And we also talk about traditional preoccupations like political stability, and also we have the shortage of talent, and also climate challenges are also a new threat to the financial sector in Africa. So we have dominance of risk, cyber risk for the banks, and also the different forms of inflation for insurance, and also talents for the fintech. So this is a question of political stability and also awareness creation, accessibility for the international group. So these are the major worries of a good number of the actors, and so this can be attributed to the manner in which the risk are apprehended by the international groups. In the face of the importance of transversality, we have strategic partnerships with different actors within the ecosystem. Can be seen as a lever for the value creation. So we have strategic partnerships established as expected. So 2024 is an important year in terms of the priority when it comes to strategic partnerships. So we can see that the priority given to the technological partnerships won for 26% in 2023 to 84% in 2024, 26% in 2023 as against 84% in 2024. This shows a collective awareness of the importance of digital transformation. This evolution can be seen through innovative solutions like digital payment solutions, and so the distribution model and the national strategy. And we can see in this strategic context that where we have a diversity, collaborative diversity, especially through the banks and insurance. So these strategic partnerships, Hicham, in technology and also rationally demonstrate the capacity of the industry to respond to transversal realities. So this dynamic aspect does not actually reflect everything across sector. Normally, we feel a strong dissatisfaction when it comes to the capital markets. We know that it's quite visible, and also with regards to the last study, the findings. So of course you're right when it comes to the 2025 barometer. So you have the different actors. We can see certain number of reforms and also reactions. And so we can see the different term markets in Morocco, and also the expanding the universe, and also different forms of geography. So we are talking about the analysis of the chart on the right. We can see that there's access where we have fundamental operations, a bit like last year, where there was a satisfactory operations. But when it comes to raw materials, actually operations actually are still underdeveloped. So this actually signals an absence of access, and also we have investment when it comes to raising funds actually show very high or significant deficiencies. So in spite of the key characters to develop these, we've equally observed that sectorial disparity. And so for 2024, So we have better access to finances, and so we have satisfaction in general. So for the fintechs, we can see that when it comes to there are global tendencies that actually show these disparities. And so, what is the situation? The necessity of a differentiated approach for the markets. The first is to consolidate the market infrastructure. You all know this year, and also strengthening the depth of the market, and also the different services linked to the priorities of the different regional economic groups. So we have the capital markets. We've seen the disparities with regards to access to strategic events. So we can also see clear events where we have the infrastructure regionally. So this context, we have initiatives that actually play a role to support this transformation. However, what we see again this year is that this progression, so this respective progression of these two initiatives are still, we can see, are still pushed by the ZLECAF, for example. And see here we can see that 20%, followed by 8 for AFCFTA. But unfortunately, we have only 90% of respondents actually consider this as a real game changer. And this is a significant decline with regards to last year. So these are the practical challenges. These initiatives, also the African Continental Free Trade Agreement, and also this by having a limited impact for 48 to 67% of respondents. And I will invite you to stay back for this afternoon's panel, and we're going to talk about how we are called finances, and also to see what we can be done a lot more for the phase 1, phase 2, and 3 of this initiative. And to maximize potential, it's essential to actually enhance, accompany, and also support, and also transform sustainably the financial landscape in Africa. Now, with regards to financial inclusion, what are the major obstacles for financial inclusion? So in 2024, so the offer has been identified by 44% of vectors for financial inclusion, notably with regards to the financial services, and also the adapted digital solutions. So we have 38% of response, and we have the low level of financial education, and also the low level of trust for these financial institutions. So we need to identify this phenomenon each year for this particular problem, for the importance of this, the lack of infrastructure, and also the deregulation. These are the two last points. These are each year still stay as important challenges. In the face of these obstacles, what are the major levers, as well as the major initiatives to actually carry out to actually reach financial inclusion? First point, digitalization. 63% of architects of actually unbanked population, 62% of this inferiority in terms of bankability. So we have interoperability. So this becomes an important point, and also we have financial education for populations. This constitutes about 40% of this adoption. So as actors, and also the huge surprise. So we have the banks that come in with actors that actually deploy with about 84% when it comes to implementation and the deployment of these different unbanked populations, with over 60% deployed. So now when it comes to risk, let's examine the different mutations, and so to actually reconfigure the new openness. So when it comes to the analysis of the risk, so we have the cyber risk, and also the operational risk, and also rapture. that has been observed recently, and also the financial risk for the first rank. And so it's important to actually create these nuance, because the financial risk has considered by 34% of actors as being high or very high and significant with regards to the different issues with regards to the economic context. And so we have the level of significance
in the manner in which those emerging risks are apprehended and evaluated. At this level, it's interesting to mention that for the 4th edition of the Symposium on Financial Stability recently in Rabat, the regulators were especially sensitive to this ESG dimension and enacted certain initiatives and reflections to integrate this dimension into our strategic and decisional processes for financial regulations. Facing the reconfiguration of this exposition, how do we manage the priorities? The first priority is the framework of digital finance. 84% support, reflecting the urgency to adapt regulation to innovation. Second, adapting international prudential means to local specificities with a Pan-African regulatory frameworks. Various actors expressed their wish to go toward harmonization or convergence. There is a debate, and the work of the panels are trying to demystify this dimension. Third priority, risk prevention, sovereign crisis, and aspects of sustainable finance appear as non-immediate priorities. Now for governance, in order to support monitoring of all those challenges. How did this government evolve in 2024? First constatation clear. Specialized committees, fundamental specialized committees are in place for implementation. Audit committee, risk committee, nomination and payment committee. All this is explained for the banking sector through the existence of a regulation that makes the implementation of those committees mandatory. As for emerging risks, in link with innovation and RSE, specialized committees to manage those issues, especially the Innovation and Transformation Committee, present a much less high level of maturity, around 25 and 15%. So we are still working on those issues, on diversity and parity. So Rama, could you please say us a bit more about this for 2024? Well, the tendency for 2024 is still weak. 67% of financial institutions have less than 25% women, which is very, very low. Ambitions are still very high, but from one year to the next, it's moving very slowly. We still have very few women in governance committees, and this needs to go quicker. Now for financial performance. It's an evolution financial sector that's still solid, but confronted with strategic challenges. Three major tendencies for this analysis: strengthen financial fundamentals with a cumulative betterment of solvability, 65%. For operational efficiency and results, the persistent challenges are the quality of the actives, lower quality. For 26% of institutions have better quality, lesser quality actives, assets. So as for liquidity progression is stable but still quite moderate. When we look at banks, insurances and fintech, we see things are getting better in general in terms of rentability and solvability. In Nigeria, regulators ask financial institutions to strengthen their level in order to be able to absorb exogenous shocks. For the capital market, solvability was strengthened with a better management at the banking level. To finish, let's talk about ESG integration. 29% of investment activities integrate ESG capacities, and 80% should do so short term. What we saw is the measure of the carbon print remains marginal, with only 4% effective activity for reporting, a feeling that requires anticipation for its implementation. As a synthesis, what are the main teachings we learned? The most important ones. First, actors have a high level trust given the economic perspectives, fintech being the most optimistic and capital markets actors the most prudent. The main risks are looking for sustainability and better digital performance dominates the strategy. ESG remains secondary for many actors, as we said, and the adoption of cloud is getting quicker, but we still need progress in IA and in data to strengthen digital maturity. Governance is also getting stronger with a real of growing committee diversity and independence. The evolution of regulation is estimated crucial for digital innovation and new risks. And finally, financial inclusion is still facing challenges for infrastructure and education. Ladies and gentlemen, we're reaching the end of this presentation. The full version will be shared around mid-January. We wish to thank all the teams for their contribution for this barometer. We are convinced that the panel works will strengthen what has already been shared and allow us to contribute to favor the development of an resilient and inclusive African financial ecosystem. We wish you an excellent summit, and we'll see you at the next edition of this barometer. Thank you all.